Hello, everyone. Welcome to the Blend Talk. My name is Marcel. I'm the co-founder of Dynamo. We are really happy today to have a conversation with Joan Larrea, the CEO of Convergence Finance, one of, if not the most relevant organization in blended finance in the world. So in this conversation, we're gonna talk a bit more about what blended finance is, what is the importance and how it can leverage capital to build a positive impact economy. So um, before we get into these questions, let's start by introducing our guest. So John, tell us a bit more about you.
Thanks, Marcel. To introduce myself briefly, my background is mostly in development banking and also in private equity, a lot of it in infrastructure and project finance, and all of it in the emerging markets of the world. I don't have the pleasure to know Brazil very well, which is why reaching out through entities like Dynamo is really important for us. But I have seen a really fascinating tour of both purpose-driven investors as well as totally financially driven investors. And that's been a really helpful background for this whole conversation about blended finance.
Amazing. Thank you so much, Joan, for being here with us. Uh, well, based on your experience, um, where and in what context you see that blended finance makes more difference?
Yeah, so it's very good for um, situations where you can imagine private sector interest, but it isn't present. So just to go back to definitions, blended finance is the strategic use of concessional money, purpose-driven money, non-market price money to drive private sector investment into the Sustainable Development Goals and the Paris Agreement and other development objectives. So where it works best is where you almost are there. Edge scenarios, structures that can be viable with a bit of catalytic capital, and where there's a purpose from the development side in introducing and familiarizing the private sector with that style of investing. It's not particularly good. Blended finance is not particularly good where you have where you're going against a flow. So in crisis situations or where there's absolutely no private sector interest at all. And it works best when it's recognizable, when it's a standardized or a familiar business model to the private sector. It also has to speak to the purpose of the party who's placing the non-market capital. So it works really well when a donor entity, for example, can see that they will have significant impact putting the money in contact with private sector capital to draw on private sector capital, and not when it's very low impact. So you need impact, you need return, and there has to be a purpose for that donor to be in the deal. That's when blended finance really shines.
That's a very important point, and such a great opportunity and alternative for the challenging and challenging context that we all live in to address climate emergency, inequalities, to leverage market-driven solutions to solve social and environmental problems. So for according to your experience in your journey ahead of Convergence, uh, please share with our audience a bit more about Convergence Finance,
Mhm.
the important work that you guys have done globally, and what are your main lessons learned and challenges that you've had along this journey?
Yeah, well, when we started at Convergence Blended Finance in about 2016, I used to joke I'd be the only person in a conference who used the words blended finance, and everybody would look at me and be a bit puzzled. And now, when I go into a conference, there'll be a whole panel talking about blended finance that hasn't even a Convergence person on it. So we've gone a long way. I still think there's an awful lot ahead of us to do. So what we've learned is there are two paths we would like to drive forward in blended finance. One is in really getting to scale. All of the work we've been able to capture of everybody around the world using blended finance is still at somewhere around 10 billion, $14 billion a year, and the needs are massive. So how do we get to scale? What we've learned and what we try to communicate to others is it's really important to standardize, right? And not start from scratch or start from zero on every single transaction that one tries to put together. Otherwise, you spend 3 or 4 years doing it, 3 or 4 years explaining to donors why they need to be there, 3 or 4 years explaining to the private sector why this deal makes sense from their fiduciary angle. So standardization is going to be really important to get us to a large volume of business. And another thing that we have noticed is that blended finance does not operate in a vacuum. Like any other flow of finance, regulations and laws affect how it can go. For example, if you're trying to get philanthropies to do things to attract commercial investors into a transaction, philanthropies have to be legally able to put their money into a private sector transaction, which is not always the case. So we can talk all you want about blended finance, but if the law or the regulations, if the law doesn't allow the philanthropist to act, you have a problem. If credit ratings are such, or Basel III rules are such that no matter how much soft capital you put in something, a commercial investor cannot go, an institutional investor cannot go to that market, you don't accomplish anything. So blended finance doesn't exist in a vacuum. It needs other things to be developed at the same time. So we've learned a lot over the years. The one other thing I will say is, in addition to standardization and getting to scale, there's another role for blended finance. And we have seen this be important as well. It's in that experimentation stage. So the design of new kinds of asset classes does take some tinkering, some effort to try to come up with the first one. Now, I don't advocate continuing to tinker after that. You're trying to design for big things. But it's blended finance has been used sometimes to come up with something that people haven't heard of before and hope to replicate it. So debt swaps for nature are an example of that. The green FDIC that was done in Brazil is an example of that. So there's that value to blended finance as well. So, the lessons are get to scale, standardize, all that, but also have a bit of an incubator for things that you realize don't exist yet that also could get to scale.
Mm-hmm. It's a very interesting that one of the main lessons learned that you just shared with us was the standardization. Can we just double click on that? Is it about metrics? Is it about impact or regulation? What does it come from when you talk about standardization?
Standardization for me is being able to develop ideas that are cookie cutter in English slang. In other words, you can come up with one and other people can copy it very quickly.
Mm.
And it's familiar. Like when you walk into a pension fund, they go, oh yeah, it's a bond. It's just a bond with a sustainability feature. So the interest rate drops if the borrower does some good things for the environment or good things for biodiversity. And I, the investor, I'm going to be okay, but there's a donor who's going to buy that benefit. I get that. That's very, very understandable. That's what standardization is. Standardization is thinking ahead. So, for example, IDB Invest, using some Canadian soft money, went into Uruguay and designed a series of renewable energy projects using some of that soft money to kind of create a product that they invested in, but they designed their entire series of renewables projects so that they could exit to the private sector. So they used blended finance to get their deal done, but they thought ahead to designing these transactions so they would be familiar to, understandable to, digestible to other people, and that they could offload those assets once they proved them out. You can imagine something like that working in Brazil, maybe not renewables. Brazil already has a lot of that, but in other sectors. So standardization, that's what I'm talking about. Impact metrics, you're onto something as well. That's not really a blended finance issue, but every blended finance deal has at least one party in there, not only, or maybe not at all for commercial returns, but for impact. So one strength of blended finance part of transactions is that somebody is buying impact, and therefore impact is important and central. And I do think also, therefore, I'm going to wander into the M&E, the monitoring, evaluation, impact world for a moment, although that's not strictly speaking blended finance. I do see that there has been a slowdown in transactions where there's a lot of debate about how you measure things. And coming up with standardization, it's pretty easy in a renewables transaction. You look at carbon, and then you look at social benefits. But what about a biodiversity transaction? How do you measure that? You know, as we all joke, but it's serious. Is an iguana as good as a jaguar? When you're counting biodiversity, is a teak tree the same as an oak tree? So getting to standardization on impact metrics also is going to be important for speeding up any transaction with an impact player in it. And blended finance always has an impact player in it.
Great. Brazil is going through a very big momentum in multilateral agendas. So Brazil is hosting G20 this year and COP30 next year. It's such a great opportunity to foster an inclusive, equitable, and regenerative economy and unlock conversations to address the most pressing issues, like energy transition or inequalities and so on. So, what are your thoughts and how you think that blended finance can be an important instrument or mechanism to support our leaders to make the call and take action to promote structural change?
It's a huge question. I will try to nibble at the edges, but please come back and ask a follow-up question if I don't do it justice. It's an incredible question. It is one heck of a moment for Brazil. And I do hope you take huge opportunity to show the leadership I think that the country is poised to offer. So, like I said, huge question. So Brazil has an opportunity to lead in all sorts of spheres where it has strengths, right? In adaptation, not just in mitigation, but in adaptation and social issues. And to date, blended finance has often been a conversation between foreign donors, official providers of aid to the developing countries of the world, and foreign investors. And I think Brazil has a moment where you can flip this and say, blended finance is ours, it's our instrument, and we would like to set the agenda for when and how we use it. And it's not always about foreign investors and foreign donors. There are massive resources here in this country. It would be wonderful to see you be a strong example of country-led development and country-led blended finance. What is it that Brazil thinks is important? Is it adaptation? I'm not Brazilian. Did I just make a bad statement to start with? But where you find it important, I think that Brazil needs to own the subject, be fluent in this conversation. Think about what domestic resources you have at play from parties like BNDES or others that could, instead of going out in pure form toward development objectives, be used to catalyze investors, whether they are foreign, whether it's the Brazilian conglomerates. But how do you rally your own resources better using blended finance? And then how do you turn around to the foreign parties who are part of the story and ask for their support in ways that make sense for you? If Brazil can really shine in that way, I think that gives others a great model to follow as well. There are other countries who also are staking ownership of blended finance and charting their own course and inviting others to support them rather than seeing it come from abroad. So I do think you have an incredible opportunity. I think you have some assets. I think you own some development issues really well. That's why I bring up adaptation, is because, you know, of the Amazon and the other natural resources you have. So you have several ingredients here to really make a meal out of this, and I'm looking forward to seeing what Brazil does actually.
Yeah. Thank you, Joan. Well, yeah, indeed, it's a good opportunity. Unfortunately, May 2024, Brazil went through a climate disaster in the south, um,
Mm.
inaugurating a new era of extreme climate events. Um, so that uh, created a massive uh, issue for 500,000 people that were displaced, over 2 million people directly affected, and half of the state GDP was absolutely devastated. So that is, I'd say, an important example of the importance to address these issues and the recognition and acknowledgement that only philanthropic capital and emergency capital won't solve these issues. So what you just said about blended finance is absolutely crucial to mobilize public capital, concessional capital, and commercial capital to mobilize capital in the level of the needs that this region has to rebuild and regenerate. So that's a, I think we have this case to show in terms of how we can respond. So I hope that we can get back here in the future with positive news and evidence, positive evidence. So Joan, just we are wrapping up, but I just wanted to ask you one more question. Convergence Finance and Dynamo, we've been partnering for many years. Some years ago, in 2019, we did
Mm-hmm.
the very first seminar of blended finance in São Paulo. We had like 300 people, multi-stakeholder, engaging conversation, and you had you here with the team of Convergence, and it was great. Earlier 2024, we did a second seminar again together, in which we had high-level people from the government, academics, market players, the whole financial sector, MDBs and so on, DFIs as well. So definitely what we can say after 5 years from our first seminar, it's that the ecosystem is growing. It can grow faster, definitely. But now we are creating a community of practice, a community of practitioners of blended finance. So if you could tell them, if you could share like 2 or 3 tips for them to foster their solutions in blended finance, what it could be?
Maybe two. And it is thrilling, isn't it, to see how much progress has been made in awareness in Brazil, and I think you can take large credit for that. Um, my tips would be to keep talking to people who don't look like you. What I mean by that is government speaking with institutional investors speaking with NGOs who know specific sectors and specific social issues very, very well. Um, crossing those boundaries matters a lot, because when you're trying to put a blended transaction together, you end up talking to people who are not like you and who have different missions. And alignment doesn't mean that you all have exactly the same goals. But if an institutional investor sees a potential for profit and is concerned about risk, and somebody else doesn't mind, you know, providing fully catalytic money, grant money, but sees an impact opportunity, you have the makings of something, right? So, learning to speak with people who are not like you, learning their language, understanding their motivations, being able to flip your language to speak to those motivations. That's a really important area. And the second one is a bit related, which is the importance of track record and data. It doesn't do any good for one wonderful blended finance transaction to happen somewhere in Brazil if nobody knows how that deal was put together, how long it took, and how it turned out. Did the impact-seeking party end up walking away with the impact they were hoping for? Did the party who put their money at risk as a fiduciary investor end up returning the kind of capital to their, the people who owned that money that they promised? So until you can spell out the data on what has happened, this is why Bloomberg makes a gazillion dollars selling Bloomberg terminals, because they have data and we all need that data to price the next transaction. Blended finance suffers from not enough data. So talking to people who are not like you in the front end, figuring out how to work with them. And on the hind end, on the back end, recording the experience, good or bad, so that somebody can follow. Because I talked about standardization and scale. I haven't talked enough about speed. We need speed of action. We cannot have another event, and unfortunately, we probably will in Brazil or elsewhere where 500,000 people are at risk. We just can't sit here and figure these things out over a course of years. We have to figure them out today and tomorrow. So learn to speak other people's languages who possibly are useful to you in collaboration, and then record the experience in a way that the market can react, because markets can react really quickly when they know how to price risk and where they know where the risk is. And if you and I can take to our investment committee or credit committee the fact that the last 14 deals look like this, then everybody gets comfort, right? If you don't have any data at all, you're not going to move. So those would be two things I would really advocate.
Thank you, Joan. Very, very insightful, because talking to different people, it helps building social capital, and data gathering, it helps making better decisions, informed decisions, consistent decisions, and evidence-based decisions as well. It helps driving public policies. It helps creating other cases, including to replicate and help building standardization, as you said. So amazing thoughts. Thank you. And thank you, Joan, for accepting this quick conversation. Thank you again for the amazing partnership that Dynamo and Convergence Finance we have done together. And we look forward to continuing working with you.
Thank you so much, Marcel. We're thrilled to continue to work with Dynamo. Thanks for everything you've done in Brazil. We can see it from abroad, and we're delighted to work with you. And I, of course, instantly accepted this invitation because I think it's important. And I really look forward to seeing what Brazil does with the G20 work and beyond.
Amazing. Thank you.
Thank you.